This is the second video regarding not-for-profit organization. In the previous video, we discussed about the features of not-for-profit organization and the features of receipt and payment account. Today, we will be discussing about income and expenditure account and the balance sheet. Now, income and expenditure account is almost similar to profit and loss account which we prepare for profitable organizations. Okay, here we will be preparing income and expenditure account. We will be using all the nominal accounts, expenses and incomes. Okay, so we can say the income and expenditure account is the summary of incomes and expenditure for the accounting year, and it is nominal in nature. All the expenses will be debited and all the incomes will be credited. Okay, it is almost like profit and loss account, okay, which is prepared for the business organizations, and it is prepared on accrual basis. Receipt and payment account we discussed, it is prepared on cash basis, whereas income and expenditure will be prepared on accrual basis. That means revenue nature items relating to current year will be recorded. Adjustments relating to prepaid expense or outstanding expense will also be recorded here. Okay, it includes only revenue nature items. It will not record the capital nature items. Okay, revenue nature item, revenue receipts and revenue expenditures will be recorded, and the difference between them will be either known as surplus or deficit. If income is more, then surplus, and if expenditure is more, then deficit. So it like in business for profitable organizations, we prepare P&L, and with the help of that we get net profit or net loss. Here we will be getting surplus or deficit. Okay, all the revenue items relating to the current period are shown in this account. Okay, now the difference between them will be known as surplus or deficit, and it is transferred to the capital account shown in the balance sheet. Okay, now this point is important. The income and expenditure account is prepared on accrual basis with the help of receipt and payment account. Okay, like P&L account we prepare with the help of trial balance. Here we will be preparing it with the help of receipt and payment account, and additional informations are given regarding outstanding expenses, prepaid expenses, depreciation will also be recorded. Okay, all this will be adjusted in the income and expenditure account, whereas it will not be adjusted in receipt and payment account. The last point is important. Okay, it is prepared on accrual basis, and adjustments regarding prepaid expenses, outstanding expenses, depreciation will be adjusted in income and expenditure account. The format you see. Okay, subscription is the regular income, so we will record that. Okay, subscription, outstanding subscription at the end will be added. Outstanding subscription in the beginning will be deducted. Okay, this we will discuss in detail later on. Similarly, entrance fees, donation. If donation is of specific nature, then it will not be shown here. General donation will be shown here. And if question says that entrance fee is to be capitalized, then it will be shown in balance sheet. It will not be shown here. Similarly, interest on investment, miscellaneous receipts, sale of all newspaper, revenue nature items will be shown here. Okay, revenue nature items. Okay, revenue nature receipts, incomes will be shown on the credit side of income and expenditure. It is nominal in nature. Okay, in the same manner, all the expenditures of revenue nature, like salary, we will adjust outstanding salary, prepaid salary to it. If rent is outstanding, it will be adjusted to rent. In the same manner, all revenue nature expenditures will be recorded. Okay, printing, honorarium, depreciation, repairs, everything will be recorded. Now there are few terms like honorarium and all that we will be discussing in next slide. Okay, so all the expenditures will be recorded on the debit side, all the income will be recorded on the credit side, and the difference will either be deficit or surplus. If income side is more, then we will earn surplus, and if expenditure is more, in that case it will be deficit. Okay, go through this each point. Now what is the difference between receipt and payment account and income and expenditure account? Receipt and payment account is real in nature, it is nominal, it is summarized form of cash book, and it is similar to P&L. Okay, it is based on accrual basis, that is income and expenditure is prepared on accrual basis, and receipt and payment is on cash basis. It includes recording of items both capital and revenue nature. Okay, here only revenue nature items are recorded. It includes items relating to current year, whereas irrespective of the current year or previous year, if cash is received, it will be recorded. Okay, opening balance will be there in receipt and payment, and there will be no opening balance in the income and expenditure account. Sides. Okay, receipt and payment, the debit side represents the cash receipts, and the credit side represents the payments. Okay, when cash is coming in, debited, cash goes out, payments will be credited. Okay, in income and expenditure nominal nature account, so on the debit side all the expenditures will be recorded, and on the credit side incomes and gains will be recorded. Okay, receipt and payment will have a closing balance of cash and bank balance, and the closing balance will represent the profit or loss, which we call it as surplus or deficit. Okay, in receipt and payment no adjustments will be recorded. Okay, and here all the adjustments relating to prepaid expenses, accrual income and all, accrued income and all will be recorded. Okay, then balance sheet, along with balance sheet, receipt and payment need not be mentioned. Okay, whereas in income and expenditure will be part of, will be accompanied with balance sheet. Okay, transfer of closing balance, the receipt and payments closing balance will be shown on the asset side, whereas the closing balance, that is surplus or deficit of income and expenditure, will be added to the capital fund in case of surplus and deducted from capital fund in case of deficit. Then the format of balance sheet, it is almost same. Few differences, like in profitable organization we use the word capital, here we will be using capital fund. Then here there will be certain funds, okay, like building fund, donation fund, specific funds will be mentioned on the liability side. A separate account will be there, and the donations for this respective funds will be credited to that, and expenses will be deducted from that, and the balance, if it is credit, will be shown on the liability side. Okay, in the same manner fixed assets, furnitures, investments, current assets, okay, almost similar. Specific funds will be mentioned as I told you. Okay, and if other liabilities like creditors, bank overdraft are there on the liability side. One difference is, instead of capital we use the term capital fund, and we will be showing specific funds on the liability side.